Good day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up for this Tuesday, and we're now at the 23rd of June, 2020. What an interesting day. Whoa. If you were up last night, you saw Peter Navarro answer a question to a Fox News reporter at about 10:30 at night, the wrong answer. He basically answered a question that was lengthy, to admit that. And it sounded as though his answer meant that the U.S.-Chinese trade deal was over. The market, you know how these algorithms are programmed. They listen to everywhere, what's going on. I mean, it's unbelievable what an algorithm can do and how much they watch. The market just tumbled on it. The president tweets that the trade deal is still on. The market turns the corner. I swear, if you got out of bed and you wanted to turn left or right, by the time you were doing that, you were down 400 or whatever, and then you were coming back up like a steamroller on the other side. Interesting day. The other thing that we're watching are world PMIs. The PMI, you know, the different indexes that are coming out of there. I watch, of course, the purchasing manager indexes a lot because I want to know what the factories are doing. And they keep improving. Of course, they're all coming from all over the world from ground zero. So they're going to look better. They're going to look better for a while yet. The question is, as we get through that, what happens? And we don't know. Are there problems lurking out there? Yeah, but you won't see the full extent of them till the PPE programs run out. When and if they run out, I say if because we might get another round of something because we saw Steve Mnuchin talking about that, our Treasury Secretary. I know the president's pushing for it. The question is, can they get it bipartisan to give people another round of money? Because if not, come the end of July, I don't think restaurants, a lot of them, I'm hearing up to 25% will make it. The people that are going back to the restaurants, like in Illinois, now you can go back in a restaurant starting, I think it's this Friday. What's the attendance going to be? What's the restaurant going to look like? The ones that are open in different parts of the country, according to the Restaurant Association, not me, they're not running anywhere near 50% capacity. That isn't good. Their lunch business, way down. Their other businesses are giving them, what, 20%, 30% occupancy when you take it? They can't make it on that. They need to have higher numbers. Other restaurants will do better. You know, I'm just giving you what they said, not what I said. So we take a look, and you don't need me to tell you this market's running on the Amazons of the world. It could be the Twitters, the Facebooks. I can go on and on. It's FANG stocks. It's tech stocks. They're the runners of the market. And you can see you got through this 102.94 area, but you haven't really gotten away from it. You jumped, you came back. You do realize how many days in a row now you've been hitting that old number? I'd like to see which way it's going to break away from it, but we now have almost a week and a quarter where every single day the market's stuck at that 102.94 area. Have we got a pattern? No. We certainly have a bull pattern. There's no question. This ended that run. We came back up, we're challenging the highs, and we just keep meandering right here. When I put on the moving averages, we can see this market, it's finding its legs at the 18-day average of closes. Until that ends, just what I said yesterday, there's no reason to think it ends until it ends. So we'll get an idea if and when that comes. Right now, getting back under 101.93 probably sets up a challenge of that number, wherever that 18-day average comes in. The resistance, well, you know what I'm going to tell you. It's the Bollinger Band, which acts like a fence as this market tries to make that run. And it did it again today. You closed 104.63. The Bollinger Band's 105.43. Today's high 105.83. It got slammed back. It's not bad. It's still very good. This is the play of plays. You don't get this in your lifetime very often. So I am not calling a top in it. That is not what I'm saying. I realize how powerful the tech stocks are. When I look at the momentum, if I threw the name off the chart, I think the pros took money off the table today in an overbought condition that isn't trending, but the bigger picture is still bullish. That's how I'd analyze it. SMH. On SMH, we have a lower low, and with today's rally at 154.10, we took out that high. So we've got distribution sideways. Overbought market wasn't strong enough like XLK to get up to the upper Bollinger Band. We'll see if that happens down the road. The industrial sector still looks bearish to me. Now, admitted, it looks also oversold. Do I think the pros are going to get aggressive on the downside? I don't right here. And the reason is the oversold condition. What's the trend? Down. What's the bias? Down. It's just oversold. So resistance back at 70.57, but an oversold condition. In the energy sector, this still looks bearish. This market, though, is very oversold. It's hugging the 100-day moving average of closes. The resistance is the 18. You can see that for yourself, but you're not going anywhere. You haven't been able to break through anything. There's a lot of time being spent, and it's certainly not acting like those tech stocks that you wake up, they're $50 higher in Amazon before you know what's going on. I mean, it's just day in and day out. When you look at QQQ, I'll stay with what I teach. First challenges of Bollinger Bands often act as a break. That's what happened up there. Don't know what it'll do tomorrow. I have a market that's overbought, hit the Bollinger Band, hit an all-time high. I'm not blind, I'm not bearish, I'm just pointing out what the market is doing. We know this is the strongest sector. The emerging markets are trying to be good, but in the process of having higher highs and higher lows, they've gone nowhere. They're just sort of hugging the 18-day average. I look for resistance, and I said that before, at the 200-day. You had one move over it for a few days. You pulled down, found your support at the 100-day. Then you developed another uptrend in the past 4 or 5 days. The next challenge, if the market's good to the upside, should be 63.20, and I would expect the pros to take some money off there. The momentum is trying to turn up. The bias is certainly up. What is the number that ruins that pattern? Taking out right here, 61.21 destroys that pattern. You're back into nothing. GLD. Well, gold has been acting great. And the gold market yesterday hit the upper Bollinger Band for the first time. Today it's up a bit more than that. In my futures video, I talk about the fact that the market is locked in to the upper Bollinger Band. What does that mean? Think of Gorilla Glue. And think you put it on your feet and you're just walking. You're locked in. You can't go left. You can't go right. You can only go in a straight line because that's what your feet are glued to, that particular line. Well, that's what this is, in my opinion. And you could develop the embedded reading. So the market has a shot here. And you should recognize that it could accelerate out of this to the upside. I am not saying it has to, but it's got all the makings of it. Not the gold miners. Overbought to the upper Bollinger Band, should have problems right here. Now, you're not going to take gold a lot higher and leave these behind. You know that. Why? Because what's in the ground for the gold miners are their assets. Their assets are that gold, and that won't put them down in price if gold keeps going higher. Logic? TLT. We still have the pattern where the market doesn't want to get away from the 18-day average. It's overbought, so buying it's difficult. There's nothing here that says sell it. The trend is up, higher lows, higher highs. But again, why would the pros support this level in an overbought condition? I just don't see it. FXE, which is the euro currency. So you got up today to 107.09. I wish the futures had done what this market did. This market is acting better than the futures in that it got up high enough to do what I was saying. When this market was way up here and lost the embedded reading all the way back over here, I started saying it's going to make a run at the 18-day average of closes. And as you can see, I was right. Then I also said to you, I don't think this market's going to have legs to the downside. I'm not calling you. I'm not on the phone with you. I'm not telling you buy it or sell it. I'm just giving chart analysis. And if you take out the high of an outside day down, watch out. That's a bear trap. I know I said that in these videos. They're still up there on YouTube. And boom. Now the market has to figure out what it wants to do because it's got a pattern of a lower low and a higher high. It's out of the downtrend. What is it? That's what we're all about to find out over the next short while here. Now, I'm added today another chart to my ETF subscriber video. I'm now up to 35 charts. I already know BETZ, when I get more days in it, it's going in there, which is the sports gambling. I believe I got the symbol right on it. It's only about a week and a half old, but I want some sports betting in there. So we're up to 35 charts on the SPDR ETF markets, and I'm going to show you which ones we have if you're interested. Now, how I start them off in the afternoon. Obviously, I'm all about technical analysis, but I always start off with a touch of the fundamentals. So, for example, tonight I'm giving my traders, when they see it, what the API, the EIA did. Tomorrow we get the MBA mortgage index numbers. They'll see them. If there were jobless numbers, I'll give them the estimates. They get all that in the afternoon. Then I cover for them, right after the markets close, what I'm thinking of the market. And the idea is there to give you confidence in your own trading. Now, this is what we now cover, and as you can see, it's a lot. I've added to this, again, like I said, I added the SMH today here. You've got JETS, XLU. You know, I've added these parts, the XOP, the UNG. We keep adding. I know the BETZ is coming, so that's going to be 4 more. So as you got them that you want me to cover, I look at them, but they have to have a lot of volume. They've got to have good market cap, and there's to be a reason for me to cover them. Not interested in something that few people are interested in. I'm also not interested in double inverse and all that. I'm not going to bother with that stuff, so I don't believe in that. So you might want to take a look at this, see what it is. Now, I've also put together a combo package, so my subscribers get a discount if they take both the morning futures, which ties in. Remember, ETFs are looking. A lot of these, what's energy prices doing? What's the interest rate prices doing? What's this doing? Well, you close at 3 o'clock in the stock market and ETF. You open at 5, 2 hours later in the futures, and they go until 4 the next day. You want to know in the morning what those futures are doing and what it might do to that ETF, so I wrap them together. How do you find out more about it? Just go to our website, www.iraepstein.com, under the word research. It's all explained. Choose your package and away you go. Thanks for watching. I'm Ira. I'll see you tomorrow.